Hello, welcome back, everyone. This is Si Wing Yi, and thank you for watching. And I'm going to share my screen. And today's topic will be a is dated January the 20th, 2023, only a few days ago. And on my previous video last week, I discussed that I'm going to use this resource more and more now. And this resource is housingwire.com. And the individual's name is, and I watch him over the years. His name is Logan Motashami. So he's the face of this website, housingwire.com. And this company, they track a lot of realistic data over time. This individual, Logan, I watch his videos many times over the years, and he's very analytical. He just provides some great information. So he's wrote the article that he put out a few days ago, and so I'm going to continue to use his resource, housingwire.com, on a bi-weekly basis, once every 2 weeks for the foreseeable future, because I really this organization is very credible in the way they report housing market data over time. So without further ado, the name or the title of this article is Housing Inventory Falls Under 1 Million Again as Sales Collapse. By the way, before I go any further, at the end of this video, if you see the value of this video, if you like it, please smash the like button and subscribe to my YouTube channel so you can keep you updated on a weekly basis, not only on the general housing market, but since my background is a real estate wealth advisor, and I help a lot of mom and pop real estate investors from all over the country to buy affordable, low cost, cash flow, turnkey, single family home rentals. So, all right. So without further ado, let's go ahead and learn from this very credible resource. By the way, this article also references other resources as well, and I will share that with you throughout this short presentation. I keep saying short presentation, it may last up to 15 minutes. Let's hopefully keep it within that time frame. So anyway, on Friday, NAR reported, National Association of Realtors reported that total housing inventory level broke under 1 million in December 2022, dropping to 970,000 units for a population of 330 million people. Well, if you do the math, simple math, clearly in a nation of 330 million, I know there are many age groups that comprise of this population, 330 million, but you only have 1 million homes inventory available for a total population of 330 million. So if you look at it from that way on a numerical basis, it's quite daunting. So in other words, just low, there's not that many homes available out there. Keep telling you guys. Anyway, at the next paragraph, it says, we now have total inventory levels near all-time lows again. What do you mean by again? Again means back, remember, around a little bit more than a year ago in 2021, at the peak of the most amazing historic skyrocketing home prices in the history of the world for the past 1 million years. I could even say that. We have very low inventory level and a very low historical interest rate back in 2021. Back then, many hot markets in 2021, the supply of inventory was below 1 month supply, whereas 4 to 6 months supply inventory is normal, healthy market. In 2021, during the historical real estate boom, we only have many markets have an inventory less than 1 month. So extreme low supply of home, extreme amount of demand back in 2021. as a result of the all-time historical interest rate. Now, this sentence tells me that we may go back to that low supply inventory level once again. So you have to read into some words as provided by this third-party resource, and I can only interpret even further, deep dive into every word that are mentioned in any kind of article that I review with you on a video based on my 30 years of real estate consulting experience, because I've been doing it longer than most people out there. How 99.9% of the people in the YouTube videos have not reached the level of years of experience I have reached in the way that I've been consulting many real estate investors to buy properties in all over the country. So I have a big picture understanding, and I have a relationship with many developers and builders all over the country, and on the specific markets, so anyway, all right, so let me see what else. Let's get back to this article. I'm sorry to digress. Let me see. Okay, as we look at the over this graph, number of consumers with new foreclosures and bankruptcy. As you can see, I'm not going to go over this too much at all. From a historical level, the potential foreclosures are so minute. It's so low. I'm not even going to talk about it because, as you can see, it's way less than 1%. Around only a few percent of the U.S. total homes are under distress. So for those of you who are thinking that there's a foreclosure wave, well, you could be thinking for a long time to come. So foreclosures at this moment are way less than even at the pre-pandemic levels, 2019 and prior. All right, so that's non-issue. That's not a relevant topic to discuss. Foreclosure crisis, there is no crisis. Anyway, so this next yellow highlight, as you can see here, if you believe people sell to become homeless, then you are in the group of people that have simply not read housing data for decades. I think it's kind of humorous. Logan has made this comment. The lack of sellers is also a demand problem. I think what Logan is trying to say, if a seller were to sell their home, they need to buy a home to live. They're not going to go homeless because they have so much equity. Many of the sellers. But sellers are not selling because they're sitting on a historical low interest rate of 3.5% or lower. And many of the sellers have massive amount of house equity in their homes. Why should they sell their home at 3.5% 30-year fixed rate mortgage to move up to a 6.2% mortgage rate and having to pay a higher price at that? So sellers, homeowners are sitting pretty. They're locked in effect, and the builders are not building temporarily throughout this year because builder sentiment has been extremely low for 11 straight months in 2022. So that's what's happening. Low supply inventory, lack of sales, and demand has subsided last year due to high interest rate. So the housing market is at a standstill, if you will. Anyway, so Logan, the author of this article, says you better, so many of you make some emotional comments, opinions. I understand everybody's entitled to their own opinions, but Logan says right here that people simply have not read housing data for decades, not just recently. So if you want to make an informed decision, you need to educate yourself further by going back on a historical basis and not just compare to 2022 to 2021, which is it's just a very small sample of comparison. It's not the whole total picture about the housing market ups and downs. All right. So again, been in the real estate business for so long, I have gone through various real estate cycles, up, down, sideways, whatever. All right, so yeah, the lack of sellers is also a demand problem. So let me see what else. And okay, NAR, National Association of Realtors, says December 2022 was another difficult month for buyers. Of course, the seasonality, during the winter months, the last quarter of each year, people are not doing transactions. But we're continuing to face limited inventory and the high mortgage rates, said NAR chief economist Lawrence Yun. Mr. Yun go on further to say, however, expect sales to pick up again soon since mortgage rates have markedly declined after peaking late last year, 2022. So if you look at this graph, it's kind of hard to see, but I will emphasize this one downward trend. As you see this vertical trend, you see the existing home sales this past 9 months or so, ever since the interest rate has skyrocketed from 3.5% all the way up to 7.3% in October 20th of 2022, we have seen existing home sales, pending sales, new listings has really tumbled. See, in the middle of the year, 2022, all the way down. You see this steep drop of lack of sales, lack of pending sales, and all that. So that this trend line will have future repercussions, future consequences moving forward in 2023 and beyond. I will do my best to elaborate more on that. Of course, the Federal Reserve is the cause of the problem. I'm not going to spend more time on it. I don't have time for this video. Federal Reserve is causing everything. They want a housing reset. They got it in a housing recession. Okay, and anyway, okay, let's go further down here. Days on the market is growing, obviously, because of the pullback in demand and the higher interest rate. However, we don't have enough housing inventory. How many times I have to emphasize this? There's not enough homes to sell. Builders try to get rid of their existing inventory by giving a lot of incentives right now. The builders' confidence index has decreased month to month throughout 2022. So they're not constructing new homes until they absorb the existing inventory of new homes into the marketplace. And so therefore, builders are lagging behind in terms of new construction moving forward. So expect some consequences in the next few years, even in terms of lack of inventory. And homeowners, the only way the homeowners, existing sellers, going to move the needle if the interest rate gets reduced, decreased fairly significantly. And I will go over that in the next few minutes. Okay, let's see. So we don't have enough housing inventory. That's been mentioned. NAR research, National Association of Realtors, says first-time buyers were responsible for 31% of sales in December 2022, which is basically a little bit more than a quarter of the buyers. Individual investors purchased 16% of all the homes. Of course, my niche is investment-based, rental home-based. So I know all about this segment of the market. So all cash sales account for 28% of transactions. What does that mean? That means that people with deep pockets are still buying many of the homes throughout this past year. They don't care about the interest rate because they'll buy. More than 1/4 of the home buyers in the past year, they have bypassed the interest rate. Think about that. They buy with all cash. So because they are very, very optimistic about the housing market, at least for the long term, right? You have to think long term. So yeah, so still a lot of money out there. So people with deep pockets are still chasing the housing stock. Does it make sense? It always has and always will. You know, up and down cycle correction will happen from time to time, as we're seeing right now. But over the long term, especially the all cash buyers out there, investors and primary owner occupied buyers as well. They they don't care about the interest rate. They don't care about the recession or whatever. They are very optimistic about the housing stock for the long term. So they are willing to pull the trigger and pay all cash, whether the property they're buying are $500,000 or $1 million or 300 grand. They have more than a quarter of the U.S. population. So, so there's a lot of money out there, especially the stock market has taken us a tumble, to say the least, in this past year. So people are entering the realistic asset class as a investment as part of their diversification of their wealth portfolio. So, all right. So distressed sales represented 1% of sales. Like I said, right? Only 1% of the homes transactions are in distress. So foreclosure is a non-issue for the time being. So don't look for those kind of houses. You'd be wasting a lot of time. Property typically remain in the market for 26 days. Yeah, average, no big deal. Realtors confidence level survey. The black graph shows 2022. So you know the index is higher than 2021. So that's a good sign. Realtors. I'm not a realtor, by the way. I'm just a real estate investor advisor, although I'm licensed broker in California that allowed me to connect with other real estate agents throughout the country to represent my investor buyers. Just so you know, home price growth cool off. Yeah, of course it's cooled off this past year. I talked about that many times. The NAR research says the median existing home price for all housing types in December was 366K, an increase of 2.3% year over year from December 2021 to December 2022. So if you look at the big picture national level, we have not seen decreasing prices, although in certain markets we have seen 10 to 15, even 20% housing price drops, especially in the pandemic boom to bust markets such as Austin, Texas, Boise, Idaho, Phoenix, Arizona, Nevada, Las Vegas, California, certain parts of the Pacific Northwest, and you know a few other areas are going through some pandemic boom to bust trophy markets. All right, so as you can see, median price of the existing home sales are pretty fairly progressing. As we almost conclude this video, housing inventory monthly supply fell to 2.9 months in Friday's report in January 20th, 2023. Is up year over year 1.7 months. Imagine 2021, we have averaged a 3.5% historical low interest rate with a supply of inventory of only 1.7 months. That's why you have seen multiple offers and bidding wars occur in 2023, causing skyrocketing of home prices to a level we have never seen before in history. Some of our investors that purchased in outside Austin 2 years ago for $250K, their investment for turnkey cash flow homes now has reached $500K. And a few other Florida markets and North Carolina markets, many of our investors have increased their value since they purchased 2 years ago to 40 to 60% value of their houses, of their rental properties. So, however, again, as I mentioned, the total housing inventory is still under 1 million. We need way more than 1 million housing supply inventory. We are less than at this level. So we are seeing, we're coming back to the low historic housing inventory for the foreseeable future. So think about it, right? Economics 101. Did I not teach you that? All right, and so what else? Further, National Association of Realtors Research, another, we have had some significant shifts in the housing market since October 2022 as mortgage rate, which peaked at 7.37% around October 20th, 2022, but it fell all the way down to 6.04 as recently as a week ago. Now it's around 6.2% 30-year fixed rate mortgage for people with excellent credit. So we have a almost 1.2% decrease in mortgage interest rate only in the past 3 to 4 months. So that has provided some positive confidence level on many potential consumers, home buyers that has been sitting on the sidelines. So we have seen inflation subsiding. We have seen mortgage rate decreasing. So these kind of trends is looking very, very good. But who knows what can happen? We're still in a volatility period. The purchase application index, according to the Mortgage Bankers Association, has also seen some uptick, as you can see in January. I know it has been down the last 2 quarters of 2022, but they're reporting more mortgage application being initiated. So that is a good sign. So I think that pretty much conclude this big picture recap. This article, basically, my takeaway is I have seen more positive signs and negative signs. In some markets, we are, in my opinion, we may, at least in the first, maybe the second quarter 2023, we may still see some reduction in home prices, not steep. It all depends, right? If the mortgage rate, I mentioned it is on the other video, if the mortgage rate is in the next few months will be less than 6%, the mortgage 30-year fixed rate, if it's come down to less than 6%, this is a psychological trigger for a lot of people. Then we can see some activities going on, and people are going to come off the sidelines, and they begin to realize that 5.5% to 6% mortgage rate is all they can expect in the next few years. So either they will continue to stay in the sideline or pull the trigger, knowing that we don't expect the mortgage rate to be lower than 5% anytime soon. So the new normal is coming back. And for those people, they have the budget, they have a long-term perspective, whether you're a home buyer or an occupier, or whether you're a real estate investor, who's to say that you should not pull the trigger as long as you have the qualification, you have the budget, you have the reserves, the requirement, and as long as you have at least a 10-year investment horizon, then you should be fine, because real estate goes up and down over the years. We have gone through many cycles over the past century, and over the long term, real estate always does well. All right, so if you receive a lot of value from this presentation, please smash the like button and subscribe to my YouTube channel. And finally, at my website below, theyearrealestateenetwork.com, you just click on my website, click on the newsletter, subscribe your email to become a free member of our real estate community, of our network member of ours. So you can receive timely, realistic, real estate education, real estate investment opportunities in different markets, cash flow, turnkey, out-of-state, remote type of investing, residential investing, single-family homes mainly. So you can become achieve your financial freedom goals buying rental properties. Thank you so much. This is Siwing Yi. I will see you in the next video shortly. Have a nice day. Bye-bye.